Hi there once again. Welcome to Market Call, our Hump Day show. It's Wednesday. We've got Kim Bolton. He is President and Portfolio Manager at Black Swan Dexteritas. He's taking your questions on technology stocks. The number to call, 1-855-326-6266, or email us at marketcall@bnnbloomberg.ca, or put your question on Twitter at MarketCall is the handle to use. Kim, great to talk to you. What's exciting you in the technology sphere these days?
Quite the roller coaster out there, eh? I don't know what's rockier. Is it the metals market or the technology market?
Yeah. What's more rocking? That's the question. Yeah, go ahead.
Well, here we are, record highs, and I just saw earlier today that Apple is now a $2 trillion company. That's bigger than the GDP of all of Canada.
It's amazing. That's amazing, isn't it? I mean, is that a sign of a bubble for you?
Well, I remember it was only a couple of years ago when the market was whining that Apple's PE multiples couldn't get over 17 times. Here we are, 34 times. So it feels a little extended, especially, it being a hardware slash, plus it's got the Apple Store and so on and all the services. But it does feel a little bit frothy out there, but you can't fight the tape.
That's amazing. 2 trillion. As you say, 2018, according to the World Bank and other sources, Canada's GDP was $1.7 trillion US. So now Apple has gone to a valuation bigger than the economic output of well over 30 million people. I mean, the NASDAQ up more than 20% this year. Is it partly euphoria because we're working at home or shopping at home? People just see an acceleration of technology adoption.
Well, when people write the history books of 2020, I think the title is going to be Fear and Greed once again. But for very, very good reason. You can see who the winners are out there. The winners are, and it's not as though it all of a sudden changed. This paradigm shift to digitalization and servicing the economy in a contactless way is something that was brewing, back in 2019 and before, but certainly it has accelerated that paradigm shift this year. And you can see who the winners are. Thankfully, we've been in the right place in the semiconductors, the memories, the CPUs, the GPUs, on the software application side, and e-commerce and the internet side. So those are the companies, those are the sectors that have really adopted this whole digitalization. And not only is it the vendors that are excelling, but it's also the end users. It's the end users that are enabling this digitalization, and and you can see them that they're excelling. Just look at this week, the likes of Walmart and Target today, and the e-commerce that they're pushing out. It will be interesting, though, as we go into the end of this year and 2021, because it's really accelerated this digitalization, and whether people already have all of these tools and services in place, and maybe it's sort of there's going to be a maturing of the industry out there.
But we will leave it there. Sorry, Kim.
Okay.
Kim, I think we got to take a break here. We'll get your thoughts, though. We have a whole hour with you. Sorry to cut you off.
All right.
Kim Bolton of Black Swan Dexteritas is our guest. He's here to talk about tech stocks. 1-855-326-6266.
Yes.
We have an email here from Samuel, wants to know about LAM research. Do you see any headwinds for LAM or LRCX on the NASDAQ in the next 5 years? Is this a good entry point?
Yeah, thanks very much for the question about LAM research. LAM research, and we'll touch on this a few times over the next hour, all about the equipment suppliers in the semiconductor industry. The LAM research is a wafer fabrication equipment and services to the semiconductor industry. They've done tremendously well. They've sort of carved out a nice niche, and they're a leader in the plasma etch and film deposition. So we actually have we own it. We have a just over 2% position. And we have a target price target of $395.
Okay. And just remind us, Kim, if you would, what does this company do, LAM Research?
Oh, okay, yeah. And I think maybe later, Andrew, we're going to look at a diagram talking about the tectonic shifts in the semiconductor industry and ecosystem. But LAM Research is an equipment supplier. So there are, right. A lot of the chip designers out there, and then there are the fabricators that actually do the etching, and then there are the equipment suppliers to the fabricators. And LAM Research is one of the equipment suppliers for the fabricators out there in the industry. And one of their specialties is in plasma etching. It's a thin film deposition platform. And so they've really sort of carved out a certain portion of that equipment supplier side.
Okay. We have another email here. Michael wants to know about Intermap Technologies, IMP on the TSX. They've done a debt restructuring, apparently. What's your view? Yeah,
we don't own it. It's a pretty small company. It's not profitable, but it's only got about a $23 million market cap. However, you can see it on the charts that it's just sort of flowing over the course of the summer. So what they do is that, they started out many years ago as a mapper, especially for the mining industry, and it's radar-based technology, and it allows it to collect that data any time of the day. And then it's really sort of come up recently as a result of the debt restructuring, but it also got certified by the aviation industry, and it's sort of just popped up. It's so very important for Intermap at this stage. It's trading. I think it's right around just under $1. That it has to prove that it can actually be cash flow positive, that it can make money. So, but we're watching.
Okay. Would you be a buyer? You're watching it at this stage. Okay.
Yeah.
We have an email from Mike. Mike wants to know about Datadog. I love that name. Is it too late to get into this one?
No. It's actually had a little bit of a pullback. Datadog is one of our favorite IPOs, and it recently had a decent pullback only because it's had a tremendous run. But we actually sold it up in the just around 90. But we're looking at, sort of, I think it's trading around 80, just above $80, $82. We will buy it down in the 70s. So what Datadog does is that they develop monitoring and analytical solutions for DevOps and businesses. And through its software as a service platform, it allows for automated infrastructure monitoring across the entire technology spectrum. And it sort of took a lot of business away from another company called New Relic. Phenomenal growth. Just in Q2 that reported, they had 65% year-over-year revenue growth. It's even beating some of the darlings out there like Alteryx, who is another perennial and investor favorite. Datadog is actually cash flow positive, and it's growing its operating margins consistently. So, but it does have some volatility in it, and I think if you can pick it up here in the 70s, you'll be well rewarded.
We have another email. David wants to know about Fiserv for a medium-term hold. And remind us what they do, please, Kim.
Okay. So Fiserv is in the whole digital payment network operators. The ones that come to mind would be like Visa and MasterCard and PayPal, Square. But Fiserv, it sort of scared some investors because if you recall back, it was about a year ago. Well, in July of 2019, they actually did an all-stock merger with First Data. It was a $22 billion deal. And then they had to sort of mesh the companies together. But during the last decade, it was one of the best performing digital payment network operators. People were a little worried about this acquisition that they had and whether they were going to be able to swallow it whole, but it's worked out well. I would say yes, it is a long-term hold, but for us, we own Visa, we own MasterCard, Square, PayPal, so it's a bit of a crowded area, and that's probably why Fiserv is a little bit further down the food chain for some investors, including ourselves.
Okay, not catching your eye right now, or not attracting you right now. We've got to take a break. Kim Bolton is taking your questions on technology stocks. 1-855-326-6266, or email us marketcall@bnnbloomberg.ca. Welcome back. Our guest today is Kim Bolton, and he's taking your questions on tech stocks. 1-855-326-6266. Connor in Toronto, go ahead, please.
I'm guessing that maybe they got the name wrong. It's actually Carl in Toronto, but I'll go ahead. Andy, thanks for taking my call. Kim, when you were on a month ago, there was considerable excitement around Art Media, and at that time you indicated that you would be soon meeting with management. So I'd like to know if, in fact, you had that meeting with them, and if so, what was your impression? Thanks very much. Stay safe. Cheers.
Thanks, Carl. Art Media. What's it trading at, Andrew?
I will get that for you in just a second. And
okay.
41 cents. These.
I remember it was. Sorry.
Go ahead.
I remember last month I said I was going to actually be meeting up with Larry, who's the CEO over at Art Media, and I just haven't got to it. Markets and clients have kept me busy. It's a volatile stock. Great technology, and it's really caught the eye. So let me just sort of back up what they do. Art Media, they're a communications company that actually uses holograms to actually beam objects, people, around the world. They can actually do full boardrooms, and they can actually beam them from one place to the other. And then you end up getting a hologram of either the person or the object. They have, and the reason that I actually wanted to go see Larry and the team is that they're actually coming out with a retail product. See, one of the problems that they've had in the past under past managements is that it was such an expensive item for people to use. And so it couldn't go down to the retail side, and only very, very large companies could afford, you know, a $40,000-$45,000 unit that they had. But I understand that they've actually come out with a lower unit, and it's down in the 20s. So, do you happen to have the stock price there, Andrew?
We're looking at about 40 cents right now, Kim.
Yeah. Okay.
Yeah, about 40 cents.
Yeah. So it actually popped, if I remember back in July, it popped up almost up to about $1 after, you know, for many years just sort of treading water down in the low teens. But with this whole paradigm shift in a contactless world and the digitalization, this really came up on the radar. A lot of the Robinhood traders actually jumped on this, sent it all the way up, and it's sort of settled, which is good. We're following it, and we just wanted for it to find some common ground, which seems to be in this sort of high 30s, low 40s. And it's quite an interesting company. I'm sure, and I don't know for a fact, but I'm sure there are a lot of larger companies that have looked at it. But with Larry and the new management team in there, I don't think they're going to sell. I think they're actually going to work this and expand it out, especially now that they have more of a retail product.
And sorry, I know you touched on this, but they do a kind of a hologram or a virtual reality imaging of something?
Yeah, so what they have is that they have a cubicle that actually, so you can walk into that. Now imagine this, Andrew. So suppose I wanted to go visit a client out in Vancouver. I could go into, and Art Media actually has an operation out in Vancouver, so I could go into their headquarters here, just up near Yorkdale in Toronto, and then you walk into this cubicle, and they actually scan you, and then they beam a hologram of you to Vancouver, and then real time you can actually address whoever your client or people are as a hologram. You're here in Toronto, but you're speaking to the clients as a hologram, real time. It's just an amazing. It sort of sounds like a bit of Star Trek in here, but it does. I saw it work last year, and it's quite amazing.
Okay, we are going to.
Yeah. We don't own it as yet, but we follow it very carefully.
I think we're going to take a break. We're going to have a look at the past picks from Kim Bolton next. Kim was on our show August 28th of last year. His first idea was Alibaba, a total return here of 54%.
Hicks, if they could only all be like that. But Alibaba, Alibaba is China's leading e-commerce platform. They have a market share over there of 62% in 2019. They actually have, 725 million annual active customers on their database. They have been doing a transition or a transformation of the business. And this is why the stock has popped. We started buying it down, oh gosh, around 180. But you know, they were primarily a online distribution platform, very much like an Amazon. But now they've also expanded into a technology enabler for online merchants, sort of almost like a Shopify, and this is by actually acquiring and getting some exceptional talent on the AI and big data side. But on top of that, and we actually have one of the fellows from Alibaba Cloud on our investment committee, and you know, they have this cloud business which is doing tremendously well. They have Ant Financial that just did a public offering over in Hong Kong. You know, they have a 38% stake in Paitam, which is India's #1 player in digital payment market. So, you know, they have the core over in the e-commerce, but they have this cloud computing, they got digital media, they got entertainment. So even though they may look expensive, this is just a great example of a massive technology company that you have to look out into the future to actually be able to swallow these multiples that they're actually trading at right now, because the runway of their various businesses is such a long runway, which makes them, you know, they're what, the 8th largest technology company in the world right now, at just over $700 billion. So we have a price target on this of 285.5. I think it's trading right now around 260.
Surely, though, the US targeting Chinese tech giants, notably Huawei, has got to be a threat here. Apparently, Mike Pompeo, the Secretary of State, has referred to Alibaba when he urged American companies to be wary of untrusted Chinese technology. So that's got to be a cloud over Alibaba right now.
It is, but it is fairly well entrenched. You know, they employ a massive amount of people over in Silicon Valley, and we know that because one of our advisors on our investment committee actually works. You know, he's the chief cybersecurity fellow for Alibaba Cloud. So we get quite a bit of insight into them. So Pompeo may be targeting, but they're firmly entrenched within the North American market.
Right. So you don't think I mean, there's going to be certainly psychological damage or investor sentiment damage if the Americans really go after Alibaba.
Well, but I don't think they'll start with the larger fish. You know, they'll start further down the food chain. You know, Alibaba's competition is JD and Pinduoduo. Sorry, and they may look at them because they actually have some connections into the Chinese government. But you know, Alibaba is so independent now of the Chinese government, and you know, they've been extremely transparent in their financials. They went public here in the States. Oh my gosh, it would be 4.5 years ago. So that, you know, and even look at I remember watching Jim Cramer on one night, and this is one of his darlings that he actually has in his trust company, because he likes the transparency that Alibaba actually gives to the investors.
Okay, we got to keep moving here. Sorry, I bogged you down there on
That's okay.
On Alibaba. Let's have a look at Zillow Group. Remind us what they do. This stock over the period, not bad, up 149%.
Yeah, you know, so we picked this one last August. And our investment committee actually asked us to look, to drill down into the whole sort of real estate industry and how it was becoming digitalized. And, you know, there are two that actually jump out. One is Zillow, the other one is Redfin. And we've worked with a few real estate firms here in Canada to give them guidance. So Zillow is an American online real estate database company. You know, the momentum of Zillow, as you can see, has been very, very strong. You know, shares are up 140% in the last year. They've rallied 200% since they actually dove down back in January. But I'll actually read a quote, and I think it actually encapsulates really what why Zillow has done so very well. And this is a quote actually from the CEO of Rich Barton, who we met a couple of times. His quote was, "Zoom meetings are changing the way families think about space and privacy. Home offices are in high demand. Backyards are more desirable than parks and gyms. Work from home policies are eliminating the commute for many." So what's happened here is that this is just another example of the digitalization and the servitization of clients by online companies. But you combine these trends with low interest rates, and it's just simple supply and demand. And you could see it earlier this week of how new home sales just blew it away down in the States. And Zillow again popped earlier this week. So we have a price target on Zillow of $88, and it's getting awfully close because it's trading at $84.70 right now. The last one that we recommended was Alteryx, but I'll let you introduce it.
Alteryx?
Yeah.
No, you take it away. This one came under pressure. Alteryx, remind us what they do as well.
Okay, so Alteryx is a software as a service used for data science and analytics. You know, the software is designed to make advanced analytics accessible to any data worker. So once again, you know, if you think about how this whole paradigm shift of digitalization has really accelerated, Alteryx was in the right place at the right time. However, a lot of people piled into it, very much sort of like a data dog. But you know, Alteryx, it popped, it went up. As soon as the earnings came out, which they beat on the top and the bottom line, the guidance was okay, but it just encouraged some profit taking out there. But I would say for the first time in years, there's value in this growth stock, and this opportunity has opened up, you know, as much as 60% potential upside from here, and with, you know, minimal downside. So we very much like this stock at this level.
We're going to leave it there. Kim Bolton is taking your questions on technology stocks. 1-855-326-6266. Mary is on the line. Mary in Burlington, Ontario. Always great to hear from you. Thanks very much.
Thanks, Andy. Hi. Hi, Kim. Thanks for taking my call. I'm wondering if you can tell me about the Spider Technology Fund, the XLK. I didn't really know what company to buy when things started to tank, so I just bought the ETF, and it's done well. I'm wondering if you think it has any more upside, or should I hang on to it? Should I sell it and buy something cheaper? What do you think? Thanks very much. I'll hang up and listen.
Thanks.
Thanks, Mary from Burlington. There are a number of ETFs out there, and the XLK is probably one of the broader. It holds primarily the larger cap tech vendors. But as I always say, there's a couple of missing items that I often find, whether it's in the XLK or the XT or the IYW, or even some of the sector funds like the SOX or IGB or FDN. You sort of get on the train and you have to expect a great deal of volatility. And what I always encourage people is you can buy these, but I'd also encourage investors who have an appetite for the technology arena to actually take a look at our fund or some of the other tech hedge funds out there, the true hedge funds, because a hedge fund actually approaches it with a moral of capital preservation. As we can see this year, these black swan events can come out of nowhere and surprise everyone. And then when the bottom falls out, it falls out very quickly. And then if you're brave enough to actually buy something and you think it's very, very cheap, maybe some of these ETFs would be appropriate. But it also suggests that you look at someone like a BSD Global Tech Hedge Fund. We are normally fully invested on the long side, but then we have an overlay of equity indices that are correlated to the underlying stock portfolio. So the reason that we do that is that it lowers the volatility of the performance. It hedges and it protects to the downside when that black swan event or a correction actually happens, and it just sort of smooths it out. And you can see it certainly from us and some other of the tech hedge funds out there, that this is a good way to actually, instead of trading it, I always look at the ETFs as trading vehicles. They're not investment vehicles. Us at the BSD Global Tech Hedge Fund, we're an investment vehicle. So, but you can take a mix of both, right? I hope that helps you, Mary.
Okay, and then Apple is a huge holding for you guys, I think, Kim.
Well, we don't own Apple. We own a lot.
Oh, I'm sorry. Did I get mixed up? Okay.
Yeah. We own a lot of the supply chain around Apple.
Okay.
And we did that a few years ago. A couple of years ago, we actually, our investment committee actually asked us to do a teardown 6 months prior to the launch of the iPhone X, the iPhone 10. We learned a tremendous amount about the suppliers, from the radio frequency to the sensors to the chip makers. And then the way we actually play Apple is through that supply chain. And it's just become more useful for us rather than just sort of buying into an Apple. It's more difficult. For example, one of our larger holdings is like an Amazon or a Visa or an NVIDIA. And it's difficult to actually buy the supply chains of those companies. But for Apple, if you drill down and understand what the Apple ecosystem is all about, we find it a lot more profitable to actually buy the supply chain behind that.
Okay, Mary in Burlington, one of our regulars, and now we've got Andre in Chilliwack, BC. Go ahead, Andre. Great to hear from you.
Oh, great, Andrew. Thank you. How are you? I hope you had a good holiday.
That was excellent. Thank you.
All right, very good. Kim, my question, please, is on NVIDIA. It's a semiconductor. I know you know it's reporting after the bell today. Would you buy it at this level? I'm looking for a semiconductor equity, long-term, either that, or would you recommend a Taiwan Semi or AMD? Thanks. Have a great day. Enjoy the show. Bye-bye.
Thank you.
Thanks, Andre. We actually took some money off the table. We had it up to about a 3.5% position in NVIDIA, and we've got it just over 1%. You know, it's soared. You know, NVIDIA has now overtaken Intel in market capitalization. So just for everyone watching and listening, NVIDIA is a semiconductor chip company who really hangs their hat in the graphic processing unit side. But perhaps maybe, Andrew, we could take a look at a chart that I sent over, and it sort of explains some of the players around that. Do you happen to have that diagram, or are we going to look at it later?
We're tight for time, but let's put that one up and tell us what we should be looking at, Kim, please.
Okay, because I think this will help address. So is this the one entitled Tectonic Shifts in the Semiconductor Ecosystem?
Yes, that's what
Andrew?
we got. Thanks.
Oh, okay, perfect.
Yes, so, that's right.
So just stand back. The semiconductor business, as you know, the software application, the e-commerce, what is it all about? It's all about data. Data is everything. So you get the data, you put it in the storage, and then you have to process it to analyze it. And this is where the semiconductor chip makers come in, because there are three sort of different kinds of silicon chips. There's the memory, there's the CPUs, the central processing unit or communication processing unit, and then the graphic processing unit. So you can see over on one side with ASML, KLM, Lam, Applied Materials, those are all the equipment suppliers to the semiconductor fabricators. The fabricators are really only two. One is Samsung. The other one is Taiwan Semiconductor, TSMC. Those are the fabricators, very small margins. But then outside of that, you have the design studios, like the AMD. AMD designs for CPUs and GPUs. Micron designs for memory. Xilinx is field programmable, so they actually produce chips that developers can actually etch on it. Now, to us, and the last thing I'll say about it, Andrew, we very much like Intel. It's difficult to find value in the semiconductor industry, but recently Intel reported, they said they had a problem in production of their 7 nanometer, and then they got punished. AMD jumped 40% and Intel went down 25%. But we like Intel. They're one of the largest out there. They have great breadth and depth of their different kinds of chips, from CPUs to GPUs to memory. But they're trading. Intel is trading at 9 times, a PE multiple of 9 times. Then you look at AMD, and they're trading at 163. Even NVIDIA is trading just over 90 times. So we see some great value here in Intel.
We'll have to jump. Kim Bolton taking your questions on technology stocks. 1-855-326-6266. 1-855-326-6266. Thanks. Okay, we are tight for time here. Hal in Lakefield, go ahead, please.
Well, this one's actually pretty interesting, because I was going to ask about the role of SOXL and SOXS. These are the bull and bear semiconductor ETFs. However, Kim has already made appropriate comments about how hedge funds can help with the problems related to ETFs of that kind. And indeed, I've had some correspondence with Amanda at Black Swan, and I'm going to continue, especially in view of the comments you made, Kim. Thanks very much. I'll leave it at that.
Okay, Kim, a very quick reaction there.
Yeah. Thanks, Hal. Good to hear from you. I believe, and I didn't hear the beginning, but I think Hal was talking about the SOX and some of the ETFs, but I didn't catch the latter part. What was the question, Andrew?
Okay, let's move on, Kim. We're so tight for time. We'll have to deal with that next time we have you on, because I think we're getting too deep into the weeds. Hal, sorry we didn't give you the full answer there. We are going to have a look at Kim Bolton's top picks after this. Okay, let's get to those top picks from Kim Bolton. The first idea, Twilio.
Yep, thank you. I just want everyone to remember this. I know I always encourage people to call us about our fund, but Twilio, I believe, is something that you should keep in the back of your mind if you ever get one of these corrections or a black swan, because Twilio is really becoming, it's a platform as a service, but it's becoming the sort of the AWS, the Amazon Web Services version of the communications world. It's really becoming the operating system.
And Kim, we are tight for time.
World.
Kim, we are tight for time, so keep it moving here, please. Sorry to cut you off. You love Twilio.
Okay.
Just remind us why.
So Twilio is a cloud communications platform. Currently trading around 250. We have a price target on a 12-month price target of 300. So it still has some runway left in it. So I would very much encourage, they had a blowout Q2. They had 46% organic revenue growth. The stock, if you get a chance to actually buy it between 150 and 200, I would just back up the truck. I try to make it quick, Andrew.
Okay, thank you, Kim. And I know you're passionate, and we love your content. Fastly, what do they do? Why do you like them?
So Fastly is an American cloud computing services provider. But one of the things about Fastly is that they're what's called an edge cloud platform provider. Edge computing has been around for quite a while, but basically edge computing is a paradigm in which both compute resources and storage is located at the edge of the network rather than being over in the center. Fastly has really sort of come up on the radar because one of its biggest clients is Shopify. And as soon as Shopify came out and announced a blowout quarter, Fastly also took off. However, but just remember that one of Fastly's larger clients is TikTok. So you can actually see it on the charts that it's actually had a bit of a pullback. But I buy it here at around $75, and then we have a price target of $95. The last one I had was Intel, and I know we talked about that, but yeah.
Yep.
But the 5 reasons we really like Intel. Number 1, Intel's breadth of product line gives it a huge advantage over the competition. Number 2, Intel has the capabilities, has added to its capabilities by acquisition every year for the last 5 years. Intel is a free cash flow machine, and they have a very enviable gross margin. And then lastly, they're cheap. They're trading at a 9 times PE multiple versus some of the other ones which are over 100. There we are.
Kim, we'll have to leave it there. Sorry to cut you off there at the end. Thanks very much indeed. Kim Bolton of Black Swan Dexteritas, the one and only. Let's have a quick look at the markets before we go. We have seen positive moves for the North American markets, the S&P 500 climbing further into record territory. The Nasdaq up again. It's up more than 20% this year. Moving on to the TSX, holding its own. It was down earlier. Crude still under a little bit of pressure, down though only around 13 cents. But our market trading almost 16,630 last time I checked. Let's have a look at gold. Gold losing some altitude, down about $40 to trade just over 1,960. As I say, crude down around 13 cents. So despite just the vast unknown here as regards what will happen to the world economy, US stocks hitting yet another high. Our dollar losing a little bit of altitude, well, only a fraction against the American dollar today, trading at about 0.7587 of a US dollar, just under 75.9 US cents. Thanks for watching Market Call. We'll be back tomorrow.